What is up, everybody? Welcome back to the channel. Today I wanted to share with you my opinion, my personal opinion, based on facts, of course, as always, about whether or not now is a good time or a bad time to buy real estate. We're going to go over what has happened in the housing market in the last 2 years, what I think the biggest obstacles for the housing market are going forward, and I will share with you my thoughts on whether or not you should buy a home or real estate in the year 2022, given all of the headwinds and uncertainty that we're currently facing. But first, before I start, you guys, I wanted to thank you so much for tuning into this video. If you get any value or enjoyment out of this video at all, please smash that like button down below. It really helps me grow the channel and expose it to more viewers just like you. My name is Jay Costa. I'm a real estate agent, investor, and entrepreneur here in northern New Jersey, outside of New York City. And on this channel, we talk about real estate. We talk about real estate investing, stock market investing, personal finance, basically how to get wealthy, how to grow your wealth, and retire early in your life. So if you'd like to join our growing community after watching this video, please consider subscribing down below. Now onto the video. So basically at this stage, I think all of us have a pretty good knowledge and understanding of how the housing market has gotten to where it is today. The COVID pandemic created one of the craziest housing markets in the history of the country, with cheap money at all-time low interest rates, a surge of younger millennial buyers finally seeing the value in owning a home, and inventory at dangerously low levels for way too long. This caused median housing prices nationally to hit an all-time high of $393,000. So is now still a good time to buy, or should you wait for a housing market collapse? Well, I just gave you a few of the biggest reasons why the housing market peaked to all-time levels. Only one of those is not the case anymore, though, and that is interest rates. We don't have all-time low interest rates anymore, at least at this point. The average 30-year fixed mortgage rate is currently 3.85%. That is up over 1% from its all-time low of around 2.7%. As a general rule of thumb, a 1% increase in a 30-year mortgage rate decreases the purchasing power of the buyer about 10%. That is a lot, and it could have a pretty substantial impact on the housing market. But just because a buyer's purchasing power decreases by 10% doesn't automatically mean that the housing market is gonna drop by 10%. That's not how it works. And the reason for that is the buyer's demand is still far outweighing the seller's supply, the inventory of homes for sale on the market. With the Federal Reserve set to continue to increase the interest rates through 2022 into 2023, where will housing prices go from here? As we all know, there are plenty of headwinds facing the housing market and just the general economy at the moment. Inflation seems to be getting out of control, oil prices have skyrocketed, and the Russia-Ukraine conflict has added even more uncertainty to an economy, an economic situation that seems to some like it's already on the brink. You can check the video I published recently about how the Russia-Ukraine conflict, the war, is going to affect the housing market going forward, right up in this corner here. Now, with all of this uncertainty, it is impossible to know where the housing market or any other market will go from here. But the most certain bet out of all of these uncertainties is that interest rates will continue to rise. Now, as a real estate agent here in northern New Jersey, in Bergen County, I think that interest rates, mortgage rates rising is completely necessary. I've said that in past videos before. I have made videos in the past and shared my opinion on why I think the housing market is so unhealthy. Whether it's because of super cheap money and interest rates, or if it's from stimulus money from the federal government, whether that's monetary policy or fiscal policy, the buyer's purchasing power the last 2 years has been way too high. And even after the interest rates on a 30-year mortgage have increased by 1.2% in just the last few months, the buyer's purchasing power is still way too high because the buyer's demand is clearly still far outweighing the available homes for sale. We have a long way to go to catch up. And with inflation being such a concern for the Federal Reserve, interest rates are gonna go up even higher. New listings are selling even faster than they were this time a year ago, with almost 59% of homes being listed for sale going under contract in under 2 weeks. That is up from 52% this time in 2021, which was an already scorching real estate market. It is my opinion that we will not see the housing market slow down. We will not see buyers' demand slow down enough to have an even housing market until that 30-year fixed rate is up in the 4.5% to 5% 5% range. After all-time low interest rates the past couple years, hitting, like I said, a low of 2.7%. I know it sucks for a lot of home buyers out there that were not able to get a home and purchase a home the past 2 years and have been looking. It really sucks to see that 4.5% or 5% interest rate in front of them. But you have to remember that we've seen these interest rates in that range, 4.5% to 5%, as recently as the end of 2018, when it spiked to 4.93% in November of 2018. And it's important to realize as well that we're not at 2.7% anymore. We've jumped from 2.7 all the way up to 3.7 already. So to get to 3.7 up to 5, you're only looking at 1 to 1.2 or 1.3% more. And with the 10-year treasury as of today trading at about 2.1%, if that 10-year treasury hits about 3%, which is kind of what it has been trading at historically the last 20 years or so, that'll bring you right into this 4.5% to 5% range. And I think this is where we need to be for a healthy housing market in order to decrease the buyer's demand and let the supply catch up a little bit. So what does this mean for the housing market in 2022? And should you buy or should you wait? Well, given all this information about interest rates, as well as all the other uncertainty in the geopolitical events and inflation and oil prices, my advice to you, and this is the advice I give to any client of mine who's looking to purchase a home that is still looking, is to be patient. You need to step back, consider your own situation, and focus on two criteria, really, the way I see it. Number one is your family situation, and number two is your time horizon. For instance, if you're currently looking to purchase a home because you're outgrowing your apartment, you're having children, you have a growing family, and you need the space for that growing family, by all means, keep looking. Make yourself the strongest possible buyer you could be. Pay off as much consumer debt as possible, save up as much cash reserves as possible, and have your lender completely underwrite your file subject only to an appraisal. That way you can make a seriously strong offer on a property that fits you and your family's criteria, and you can make an offer with a 30-day close, subject only to an appraisal. Now with this specific situation, and this is a very common situation, frankly, especially in the suburbs, you need to have a time horizon of at least 7 to 10 years. If you have a time horizon of owning your home for at least 7 to 10 years, I would say 10 is more preferable actually, you really can't get hurt. Because in those 7 to 10 years, if there's a downturn, let's just say you get unlucky, there's a downturn in the housing market or a recession or something like that right after you buy your home. Well, if your time horizon is 7 to 10 years, that gives you time, A, pay down the mortgage, pay down the principal on that mortgage, and B, wait for the market to recover. Now, could you possibly wait and try to time out the market a little bit and maybe get a better deal? Possibly, but like I said, it really comes down to your specific family situation. If you're buying it for your family, for a family situation, and not as an investment, it really doesn't matter at the end of the day. You shouldn't really be trying to time out anything. But if you're having an extreme case of FOMO and want to just get into a piece of real estate before interest rates go up even further, I would advise against that. I think you already missed the boat on that one. And frankly, I'm seeing a little bit of that right now anecdotally in my current local market, especially after the Russia-Ukraine crisis caused a sharp decrease temporarily in the interest rates, in the mortgage interest rates. If you're buying a property that is listed on the market and well marketed with good pictures, and it's on Redfin and Zillow and all of the MLS services and everything, and it's ready to move in, you are paying top dollar and then some, I guarantee you. Now, like I said, if you're purchasing a home with a long time horizon for you and your family and you need the space, you can pay top dollar, because 10 years from now, even if there was a crash the day after you close on the house, 10 years from now, as long as you can pay down that mortgage and you could afford the monthly mortgage rate, you're not stretching yourself too thin, you will be fine 10 years later, I promise you. But if you have FOMO and your time horizon is not that long, and you're just trying to get into a property, get into real estate at a lower interest rate because you think the rates are going to be higher, I would advise against that completely. Because if something were to happen right away, like a recession where housing prices start coming down and you already stretched yourself thin on the monthly mortgage payment, you can hurt yourself very, very quickly. And it may take a long time to recover. Like I said, it's very important to have a long time horizon. That is it for today, guys. Thank you so much for watching. Yet again, if you got any value out of this video, please smash that like button and consider subscribing down below. Let me know what you think in the comment section as well. What are your plans? Did you just recently buy something? How do you feel about that decision? Are you still planning on buying something in 2022? Or are you considering and planning on being out of the market for a while, seeing how all these uncertainties, especially interest rates, play out, and then maybe reassessing a year or two from now? Or do you think there's going to be a complete and total disastrous crash? Let me know what you think in the comment section down below, and I will see you next video.